Good afternoon, everybody. This is Michael Filigera. I am with Eye of the Storm, and you can reach us through Traders Helping Traders. Today, I wanted to talk about the count that I'm currently using, the Elliott Wave count, for the NASDAQ future, the NQ. And I had detailed in a post on Eye of the Storm where we stand in the rally that basically has taken place since the March 2020 lows. But in order to do that, I needed to put it into context as to where we are in the overall larger picture. And as you can see from my chart, that I'm actually able to go back to pretty much the year 2000, a little bit further, and update a chart. So I believe that on a, cycle level, that we are, or on a super cycle level, I should say, we are tracing out a super cycle wave 5 in the NASDAQ. And within that, there are going to be 5 waves of cycle degree. So our big picture encompasses a great deal of time, as you can see thus far. This 5th wave, which began in November, or October, I should say, of 2002, has already been underway for over 18 years. So in its enormity, that's what we're dealing with. And within this super cycle of waves, it'll break down into 5 waves of cycle degree. And within that, the market and the NQ remains in the process of putting the finishing moves on a cycle wave 3. Now, within that cycle wave 3, there are going to be 5 waves of primary degree. And then within those primary degree waves, there will be 5 waves of intermediate degree. As I have explained in the previous posts, the Elliott wave principle, the Elliott wave theory, are building blocks. And you can usually start with your largest picture and take it down to your smallest picture. But as you do, understanding that they're building blocks, that a sub-minuet wave, which is really can take place over minutes to maybe an hour or so, builds into a minuet, which builds into a minor wave, which builds into an intermediate wave, which builds into a primary wave, which builds into a cycle wave, which then builds into a super cycle wave. So this is important to bear in mind as these rallies just continue. So we're attempting to count where this rally is going to end up. And as we have now gotten it up, we've gotten down to where we have carefully counted within this cycle wave 3, we have counted out and getting ready to finish 5 waves of primary degree. So within that count, we are in that primary wave 5. And that began right off of that March 2020 low. So being that you can see now, here we are, this is the cycle. Wave 2 finish, we started cycle 3, primary wave 1, primary wave 2. Primary wave 3 subdivides twice. Once into an intermediate level, and then within intermediate wave 5, it's subdivided. It also subdivided in 3, but more significantly in wave 5. And I actually could have broken this down again to another 5-wave advance within the minor wave 3. So not to elong the whole pattern or not to really belittle this point, each of these waves are countable, but this is a monthly chart. So you can see each one of these bars represents 1 month, and therefore how long all of this takes to get to the points that we're getting to. Now, how do we arrive at the potential of how far or how high a market can go in a bullish advance, or how low a market could go in a bearish decline? So once again, here we are at our primary wave 3 top, resulting in that decline in March of 2020. Took about 3 weeks for the market to lose 38% of its value. Came in perfectly right in line with what our expectations would have been for wave 4. At the time, we had to wait for confirmation that indeed it was a wave 4 and the market was blasting off to new all-time highs. Nonetheless, that is what took place. I'm now going to take this down to our daily chart, which is going to more cleanly show the wave that we're counting now, which is a primary wave 5. Okay, so within that, here was primary wave 4's low is right there. That's in March of 2020. And then from there, we can see that we began intermediate wave 1, intermediate wave 2, then intermediate wave 3 really began to subdivide. And so it first created its own 5-wave advance within its limitations, its boundaries, and then each of those waves 3 and 5 subdivided again. Wave 3 I counted out as subwaves, and we have 1, 2, 3, 4, 5 to finish the third, a 4th wave correction, and an additional 1, 2, 3, 4, 5 to finish the 5th wave, and in turn, the intermediate wave 3. Then the decline that we had in September took us down to the conclusion of intermediate wave 4. Now, so it is from September's lows at 10,656 that we began to count the final intermediate wave 5 up to the ultimate highs. And within that, we have minor wave 1, minor wave 2, then we start to subdivide, and we have an additional 5-wave advance to finish minor wave 3, minor wave 4. This is how close I think we are to reaching the ultimate high. Here, I can basically count a small, but still daily, 5 waves up to that high at 13,900.5. From that level, we're looking for 5 waves down on the hourly chart. That's going to signal that that is the completion point of the primary wave 5, and in turn, the cycle wave 3, and set the stage for a cycle level 4th wave decline. Right now, I can tell you that that appears to be a very clean 5 down, but I need to let it form a little bit more before we can confirm and then put into place that this high completed the pattern. And that's pretty much where we stand for right now. So I'm going to end this particular podcast here and say that we do have additional resistance up above at begins at 13,930 to about 13,960. That's kind of a resistance zone that I had anticipated would be met and complete the whole pattern. To be honest with you, 5 waves up is all we really needed. And if this turns out to be that that high was at 13,900, it certainly went through several resistance levels on the way to that, which could have completed the entire sequence. But we're going to leave that up to the market to demonstrate to us. So there's additional resistance above. We have these levels, which are our moving averages. And this is the 200-day moving average. On the hourly, if the market starts to break below that, forming an additional 5 waves down, it would pretty much clear it up for me and start pointing to the lower numbers. And then we'll be able to fill in those blanks by establishing where we believe it should go. And on that note, I'm going to wish everybody good evening and good trading tomorrow.